Welcome to Trading Lounge and the global indices, starting with the S&P 500 here. We've been talking about this wave 3 to wave 4 over here. We've got two patterns that we need to be looking at the moment. One of them is a triangle and one of them is a flat correction. So the flat correction is pretty simple, as an A wave here, an ABC for the B wave, and then down for the C wave here. And the C wave would be 5 waves with wave 1 and 2, and then down for wave 3 here, wave 4 and wave 5. The triangle pattern is a 5-wave structure, so it will be the A wave, the B wave, an A, B and C down to here for the C wave, and then 3 waves over here for a D wave, and 3 waves over here for for wave E of 4. So in the meantime, there's not a lot of difference. It's the bias is to the downside, and quite strongly so. But yeah, it could get a little bit messy. So a trade from pretty much where we are down to the 4-4 here would be a nice trade. Then it gets a little bit complicated at that point. Let's dive in and have a bit of a look at this. So, and also too, what about if I'm completely wrong? Then we would be looking to go long above that point here for whatever reasons. And if that was the case, we would need to not use that high, but use a new high that would come in at that point and then improve on that situation. But in the meantime, we're just expecting a rally and then a down movement at that point. So going into the intraday at 20k ticks, this is it here. So we have our wave 3 with our A wave, our ABC for our B wave. And yeah, I mean, for the triangle, we'd be looking at this as the A wave here, the B wave over here, and then the C wave down here for the blue wave C. And then from this low area here, after 5 waves down, let's say, then we'd look for a D wave at that point. So we still capture this move down through here. Yesterday when we were speaking, we were looking for the low of wave 1. So we're looking for 1 and 2 and 3 and 4 and 5 down here for wave 3, then wave 4 and then wave 5, something of this. That's the flat correction. So obviously it would get quite messy down here. Yeah, but in the meantime, we're getting set up for a short trade in here. So let's go in a little bit closer. In both cases, we should be seeing further downside. So that's good news. On the 1000 tick chart here, so just get our bearings a little bit further here. So let me just get in some more data. So there we are here for this. So in this B wave up here, we've got wave 1 here and wave 2 here, and then we're looking down for this wave 3 here. So from wave 2 to wave 3 here, we're looking for 5 waves in that structure. So we've got wave 1 here already for that. So wave 1 here, and then we'll be going down for wave 3, 4 and 5 here to make this wave 3 here. This wave 3 here from 1 and 2, we'll talk about this in a moment, down for 3, 4, 5 here. This third wave should be longer than this particular move here. So that's also good news as well. So yesterday when we were speaking, we were waiting for this to finish off so we could find wave 1 in amongst all of this. So we didn't really need to do anything except just be a little bit patient and wait. So we've done that. Now we see the low in place here. We can short under this here. Now we need to understand this here. Now, understanding this here, different markets will be doing different things, of course, but from the top to the bottom, the 50-60% retracement level is here, so the market could come back up into that space. We're still shy of that at the moment, you know what I mean? So it's possible to put wave 2 here for that. That's doable. And if that's the case, then we need to understand where we can get in at that point. But I'm thinking that we need to push up here a bit higher, so a bit of an A wave, a B wave, and a C wave here. So let's just go into the 100 ticks to sort this little area out here. We'll just focus on this area and how we can get in short. So on the 100 ticks from 1000, we're into this space here at the moment. I can see there's different ways to count this down here. So yeah, it's a bit of a tricky one actually, some of this, but it doesn't really matter. We've got this nice rally here that's come back over this one, so whichever way you've got it counted, it doesn't matter. We've got that low there. All we need to do now is short this low, but as I mentioned, we need to kind of understand this a little bit better here. So if we assume that this high here is the first, move to the upside as wave A, then we can see the 50-60% roughly, well, 61.8% is down here a bit, but that's the that's where the wave B is at the moment. Now, we can look at this here as a smaller wave A and a smaller wave B here, and then some sort of wave 1 and 2 in here or something, and then wave 3, 4, 5 here. So a nice A, B, C at this point. Sitting at the 61.8%, sitting at the midpoint here, it's all good. Any sort of breach of that really, and then we'd need to be looking on the short side. So let's just assume for a moment that for whatever reasons, the market does come down. What we'd be looking for at that point would be the first low below the level, and then we would move it from this low over to this low, wherever that may be. So that's how we would handle that situation, because we want that rejected there. We want something like this level here, the arrival, the reaction, the first low below the level, and coming back up here and failing and then going down. Most of the time it will come back above the level there, just to make things a bit more complicated, and come back above the level. Then we need to focus on this little area here. And this little move down and up here is will be a fractal of this bigger pattern in here. So this arrival reaction here will be in here, the arrival, the reaction, the first low below the level, this one, first low below the level, then this ABC pattern here, this ABC pattern that may not come back above the level, but normally does come back above the level. So this bigger pattern here will be wrapped up in this little one here, giving you a much tighter, better risk reward entry at that point. And if you were going to take this low over here or this low here, then always gravitate over here to see what the price is over here, and then use that price with a classic trading levels pattern as well. So this is the most common pattern, this one here. This here is the second sort of most common pattern in that particular area there, and then we've got the overshoot pattern, but we don't have that occurring at the moment, so all good. So that first low below the level here, and then you can make improvements on that when that moves back up here to retest up here. You can get the second low, so this low here for example, then this low, and then this low here, and so on. So you can, there's always room for improvement. So yeah, and then there's your own way of doing things too. So if this is the case, then let's just assume for a moment that we're going to be going up here. So wave 3 would normally come in around the old high here, and then there would be wave 4, and then there would be wave 5. There's normally some sort of correlation in the size of these two here. The A equals C. Just take that with a pinch of salt, really. But it just gives you a bit of perspective when you're counting the waves. You'll say to yourself, is that wave 4? So that's wave 5. It's roughly the same size. That could be good there. So I need to prepare for the short trade. So then you look for 5 waves to come down. You could be cocky and short it at the top here and do all those things, trace 5 waves up here and get it. Or you could get the first, this will be 5 waves coming down to the wave 4 here again as well. I prefer to wait for this to come in, so it's a decent size. and then look to short. If that is 5 waves, I can short the 50-60% retracement back and look at the 5 waves in wave C here, or I can take that out here, and it depends where I am here. If this is trying to build, if this is trying to move up and get inside of group 2 here, 65, 72 and 80 is trying to get inside here, for example, and then it fails to do that, then I know that this has been rejected at this point, and then I'll also look to build in through here, and then also in here. I mean, there's obviously going to be a bounce when it comes to here as well. You'll probably get the 5 waves, a larger 5 waves into this space here. So as the next 1 and 2 to the downside. So then you need to rinse. It just depends on how close you want to get to the market and how professional. But I always think that moving right in close is not. It's not such a great payday with things, and it does take up a lot of time. But what it does do is it actually teaches you to trade the closer you get to the market. But you don't, I mean, day trading, you don't really, well, my experience, and I'm not the best trader, but it's a lot of work for a little bit of a small amount of money, I mean, I just prefer to feed, wait for trends and feed them, and not sort of get too concerned about them. But anyway, that's this is what we've been sort of looking for. So we can move. We've got it here. We can move it up to this one here. We're going to look for a new one under this point here, and then we can move it up further up into this space up here further as well. So it's always pretty much the same with me in that regard. It's possible that wave 2 could be in here as well. That's possible, but that's why we'll catch it under this point here. So we're just sort of accommodating, all the possibilities really. And so we're looking for the short trade. We're not shorting at the tops of markets, because if we've got this whole thing wrong and this is some sort of A wave, B wave and C wave down to here, and we're buying at the top here, then we're screwed, because we'll be in the most powerful point of the trend going to the upside. The other point too is that this is the speed of the A wave here. It's always nice if you can see the C wave here being on a bit more of an angle from top to bottom, and then you kind of know that it's lazy. And also this C wave here, that should have less volume in it than the A wave here, and the whole correction here should have less volume in it than the move down. So you can read volume bar for bar like a musician reads the score of music, as I say. But yeah, so just if you can't see it on the bar that you're looking at, then go to a larger one. But the trouble with time periods, I mean, I prefer tick charts, because you know how many trades have been, how many contracts are in a particular bar. But when you've got a 5-minute chart or a 1-minute chart, you don't really know how many contracts are in that particular time period. But anyway, that's another thing. So anyway, that's that. Okay, so the NASDAQ, we can run through this. It'll be the same as well. Once again, if I've got this completely wrong, then we need to be long above the top here, and in that case we've got plenty of time to work with this, because when it comes up it's going to pull back again as well, and when it does push up through, it's still going to come back again as well. Getting through an old high and treating that high as support is always a thing. It's a bit like this is a high here and it's corrected here and then it's pushed up and then it's coming back. So the breakout's important, but the retest is everything is important. But as long as you understand, just many roads to Rome, as long as you understand where you are and what you're doing, that doesn't really matter what you do. So we can have a triangle pattern here as well. We can drag that into a triangle pattern here with an A, B, C, D and E wave here and then move up here. That's possible. Or we're going to have this as 1 and 2 and 3, 4 and 5 here and then move up. So there's not a lot of difference, but there is a difference, and I won't know what that is until I see more from the stock market and also a bit more from here. But what we do know is that we were talking yesterday about just basically doing nothing really, just waiting for wave 1 here. So we've got the A wave here, the B wave here. We can look at this as an A and a B and a C wave down here, So we'd still need to see 1, 2, 3, 4, 5 down here for the C wave here, where that wave 3 is here. And then we can call that wave C of yada yada yada, C of C. Otherwise we'll be looking for wave 3, 4 and 5 to come down here. So yeah, that's it. And if we've made a complete mess of everything, and this is 1 and 2, and then 1 and A, B, C for 2 here and going up here, what we're going to see in the next session is we're going to see a move up here. And then it doesn't really matter, don't panic and we missed it, because there will be a pullback and we will look to get into the pullback at that point, and then we can go up at that point. So this is where we'll be over here, but that 5 waves will confirm it at that particular point in time. So yeah, so that's where we're at the moment. So this is why we need to short under the market, let the market go up, and we're shorting under it so we don't get trapped at the top. That's the thing. So once again here we're looking for a move up here, and I think that it'll fail to find support on 15.3 even though it's high, and go up there and then come down at that point. So it's a pretty nice looking 5 waves down here. You could get some sort of A, B and C out of here in some sort of awkward way, but let's just cruise in here a little bit further to the 1000 tick area here. I don't know if I've updated this, but let's just check it out. Looks a bit messy, so we're just going to go to the 100 and get in some more data here. Oh yeah, this is... So yeah, so from the top here we're counting down as 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5. A little bit sort of thing, but I don't mind that. I kind of see what's going on here. I feel it, you know. And yeah, so we've got this wave 1 tucked in here, and we're looking for the A wave, the B wave at the 61.8% roughly, and then we're looking for 5 waves up here. So 1, 2, 3, the third wave, as I always say, third and fourth come in around the old tops, and then this one up here. Now it may be short up here, it may not even sort of get there. There's plenty of resistance here, and these have all failed to get there. So you know, this wave 1's pretty small, so this wave 3 here, I haven't pulled that apart yet. It's banging its head at the 61.8% from that top to that bottom, so it'll be there for a little while. But yeah, I mean, it's end of session now and all that sort of stuff. So can this just come straight down here for that? Sure. But that's why we will, you know, we start at the bottom here, and we'll just get that there, and we can put that under here. But when I put it under here, as I always say, is that you need the first low below the level. That's, you need to rinse and repeat it, sort of thing, you know. So, and then if it breaches, then you can go down at that point. So that would be that. And then if you, this 5 waves up here, I mean, really, it could, anything could happen. It could come way up here. You know, anything is kind of possible in a way, do you know? I think this number here is really important. The market may get here, it may not get here, but if it gets here, then finding this as support or resistance here will be what you can do to go long or short, because if this is just 3 waves here and these tops get taken out, well, then you can be long. But after 3 waves here, the short trade will come in at this point. After 3, not the first one, but this next second low here. So an A, B, C, then it clears you from the bullish pattern, and then this can get you from the long side as well. So just using this number with the classic trading levels pattern will put you long or short here. And if you can count the 5 waves up here of 1 and 2 and 3, 4, 5, it might be just get to here, and then it might just drop from here. And if it drops from here, then you know, you're going to see some sort of rally at that point, and you know where you are at that point, and then you can lift this one here up into this space here and then come down from that point. So not a biggie, but just small positions, you know. If you can get, you know, and if you're short here, definitely use this one to short, and then this is going to be support here at the 150, the midpoint. So when that becomes the resistance, you want to add to that as well. You know, you want to build in trades. When you're on the winning trend, you need to be, you know, betting more, so to speak, but make sure you've got your act together and not over trading, as we all tend to do, until you get beaten up enough to sort of realize what's going on. Okay, so that's those guys. So the Russell's a little bit different, a little bit more bearish. So we've been looking down here. I counted 5 waves down here. So then we looked at this as the A, the B, and the C here for wave 2, and then this is 5 waves, so 1 and 2 here, and this little move here, I could put wave 2 over here, but it makes a nice little ABC. So I'm thinking 1 and 2 and 3 and 4 here, then 1, 2, 3, 4, 5. I think we've got, the others might want to go up. I mean, it could be, there could be the low just in here, but it just doesn't look finished to me. So I'll see how that goes. But 1 and 2 in here, if you're short already, that should be okay at this point. Any rally, if this here was 5 waves here, then the worst that's going to happen here is that we take this top here to this current low here, and this would be the 50-60% up here for this. So what you could do if you're short here, then the stop needs just to go out of the way up here, and if that's too much, then you've got too much in and you need to reduce your position size at that point. Yeah. But yeah, this is one of the weaker ones, so that's all good there. And we come over to the DAX. So the DAX, as I've mentioned before, is working in lots of 3. So we've got this A, B, C here, A, B, C here, A, B, C here, A, B, C here, and then we're looking for a little A, B, C in here. So we should see some sort of rally and then down again here, as I mentioned yesterday with this. So how this plays out here, I think that's, well, I mean, I can count 5 waves here. I'm just assuming that's 5 waves because I can see it's all part of the same family. There's nothing, they're all the kids look the same. So this is, we're jumped out of that now. So we'll probably have some sort of movement up here. I don't know how far it's going to rally. We can look at the 50% and all the rest of it. But it could be just something like this here, and then we go down. I was looking at the stock 50, so just give me a second on the stock 50 here. I'll just screen it in here. So this is it also here as well. I mean, one of the things, we could look at this as down for 1, back for 2, down for 1, back for 2, down for 1, ABC, back for 2, down for, coming in here for 5 waves. We don't have 5 waves yet, but we could get 5 waves. And that would be interesting too, because if we do get some smaller little rally here and then down here, that means that will give us 5 waves, and then we would have some sort of little ABC pattern, and then we'd be down again at that point. So down, down, and down at this point. So that's where that could play out. So it's a bit of a complicated sort of pattern, but the good news is that it, in most parts, it can be massively bearish, as I mentioned with wave 1 and 2 and 1 and 2 and 1 and 2, but I don't like that because the wave 2s here are too big compared to wave 1. And the same with this one here as well. It's a bit big compared to this one, so that's why we're working it as a corrective pattern, but there's still further downside to come, whichever way you want to look at whichever way you want to look at these. So currently it looks like we've got 3 waves down. Like I said, if this has a little rally here and then has another move down, then we'll have 5 waves down. If we get 5 waves down, this one will be about the same length here, so it's going to bring us down to here somewhere, a bit lower, and then we're going to have another corrective pattern here before going down again at that point. So it is bearish at this point. It's just working in lots of 3, so it makes it a little bit trickier. So we talked about a triangle within a triangle here yesterday, but as wave A here, and then an A, B, C, D, and E here for the B wave, and then down again for the C wave here, till we get this low in here. get 5 waves in here. But we probably won't get 5 waves in here, so we'll probably have to WXY the whole thing. But anyway, that's sort of where we are. I'm a bit reluctant to call a trade in here. I think that the US markets are a little bit better, a bit more easier to understand, if that's any better. So we've got the FTSE here, and we're definitely still in this sort of triangle pattern. Mainly because we broke this low here. I mean, I can go an A, B, C, D, and E here, and have it completed in here as wave E here. But then I would need to get 5 waves up here, and I'm just a bit reluctant to get 5 waves up here because of where the US markets are. But it's not, you know, I've also labelled this as 1 and 2 here. We'd still need to get to wave 3 up here. So we just need to keep building a case now. While the other markets are rallying in their little move up, you know, we may see the FTSE just go up here and create that 5th wave up here. I don't want to short it because, you know, when you look at this here, like, forget this bit here, but this bit here, this strong move here, it definitely looks like a 3rd wave, doesn't it? And from this low to this high here, that's the 38.2% here, and I can see it as a corrective pattern. I don't have 5 waves down here yet. It could develop into 5 waves, and if I had 5 waves here, then I'd be looking, you know, would look for a rally and a short on it, but we're not there just yet. So this could actually make another high before doing anything. So in the meantime, 1, 2, 3, 4, 5 for 1, 2, 3, 4, and 5 for 1 and 2, and 3, 38.2% for 4 and up for 5 here. That would give us a top here, and it may just be wave 3 here, and we may just go back for wave 4 while the other guys finish off, you know, and then move up. I don't really know, but you know, I could put wave E here as the, you know, the A, B, C, D, and E here, and have it completed and get 5 waves up there. That's all good. Or we need to have a look at all of this over here as wave A here, and then, you know, a very simple wave B up here, or an A and a B and a C up here. I don't know. I mean, if the US markets were bullish, then I would be, you know, more inclined to get the bullish count out of this. But I don't really want to go against the headwinds, you know, of the larger markets. But I know that this market can be doing its own thing quite separately, and that's why I've got 2 counts on it. But I'm not going to call in a trade on this, because even if it was a 5th wave, it won't be going far at that point. So yeah, no trade on this one, but you obviously you need to do what you need to do. But if it breaks down through here, then we're pretty much sort of on the, yeah, if it drops out of group 2 here, this is 76.50 and 72 and the 80 here. If it drops out of this and becomes the resistance here, then we've got an issue at this point, you know. Then you've got your short trade at that point. If that gets kicked out of that 76.50 there, that would be the short trade at that point. But you know, I can count 5 waves up to this particular point as well. I could go wave 1 and 2 here, right? And then 1 and 2 and 3, 4, 5 for the 3rd wave, and the 4th wave and the 5th wave here. That's all doable, but it just doesn't have the right look and feel about it. So I don't have enough confidence to call this in a particular direction. Then we come over to the Australian market. It's also travelling in a triangle pretty much sideways as well. And there's different ways to view this as well. So the only way I can be viewing this is really just on the intraday basis. So that's where we need to go to. I mean, once again, you know, like when we looked at the stock 50 here, or the DAX, we could look at it as down for 1, back for 2, down for 1, back for 2, down for 1, back for 2, because there's nothing broken about that, you know. So we could do that on the Australian market as well. So the bearish count I normally keep on the 50k here. So that would be, it's not too bad, you know. It would be the recession that they're all talking about. But so this would be the A wave here with an A, B, C up here for the B wave, and then the A, the B here, right? And then coming down for a C wave, and then the D, and then the E over here. I'd prefer to call it a triangle, because wave B is not, this is not like a wave 2 over here, because it's complicated. It's much bigger than the wave A here. So an A wave, an ABC for the B wave, and then down for 1, back for 2 here, and then down for 1 and back for 2, and then going into the 3rd, 4th, 5th. I think that we're going to be coming down anyway in line with the US markets, but if the FTSE does make a new high, this market tends to kind of move with it a little bit, you know. So anyway, that's just the bearish count, but I don't think we need to sort of get into that just yet with this, as the material sector's looking quite bullish. So that said, I think that let me just have a look at these things. Yeah, so I mean, this is the problem here, really. We can look at this as an ABC here, and then we can look at this as an ABC now, because it's dropped down too much. And then, you know, do we look at this as wave 1 here coming down, and wave 2 or wave B and ABC back here again? If the US are in a triangle pattern, then this is going to be an ABC pattern here. So let me just go into the 5K tick. So yeah, I mean, it could play out like this within another little triangle. So we've got a 3-wave move here now, and then get a 3-wave move here, the triangle pattern, and then move up from that point. But this what we could say here pretty much for sure is that this here is appearing to be 5 waves in line with most of the other markets. So we'll see a rally, a bounce off that 200 as support, and this 200 is really central, right, going right back to the COVID days. You know, this is kind of where it's boiling down to, and this is what triangle patterns do in a way. You know, they've got a point at their apex here, and they're just sort of in their own way. They could be rough as whatever, but they're basically just moving into that particular point all the time. And that point in this case for this market is a 7-2. So it's interesting to see it dance here with a low here, high here, a higher low here, a lower high here, and so on. So it's going to be quite sort of interesting to see if this plays out. Like I said, the material sector's reasonably sort of bullish, and yeah, so I mean, I don't want to look at it as wave 1 and 2 and 1 and 2 is possible, but yeah, anyway, let's just cruise in here. I don't think the 1000 ticks is going to get me to where I want, but yeah, so we've got to look at this as pretty much 5 waves down and look at some sort of rally in line with the US markets. Will it get all the way up here? I doubt it, but it could do in its off hours, you know. But it does have that 1, 2, 3, 4, 5 sort of feel about it now, with 1, 2, 3, 4, 5 into here as well. So it does appear to have that 5-wave move here. So there's going to be some sort of corrective pattern and then a move down from that point. So really it's just a bounce off the 200 here. How far it goes, it'll hit supply here maybe, and then pull back and then try to get up here or something. And keep an eye on the S&P and the Dow, the S&P and the NASDAQ, because it should deliver something like that. But let's go in and have a closer look at that on the 100 here. So in terms of counting this down, this is how I've got it, so you can do what you need to do. But 1 and 2 and 1 and 2, 1, 2, 3, 4, 5 for the third, fourth here, then 1, 2, 3, 4 and 5 here for the third, the fourth, and then 1, 2, 3, 4, 5. So I'm not far off here, calling the low in here. I'm not suggesting to go long, but we should see further upside. Will it do something, you know, like this? Is that possible to get that far up? This would be 1, 2, 3, 4, 5. So the first job you have to do is to see if this A wave here, because the zigzag in a wave 2 is normally a 5, 3, 5 structure. So see if we get 5 waves in here. See if you can count 5 waves. If you get 5 waves here, then you're going to get some sort of correction, and then another 5 over here. It won't be good trading. It will be quite, you know, you won't be able to put your stops too close to the markets or anything. You know, you could buy at the moment, put the stop under the 200. That's probably your best bet. And then just, you know, as soon as you see enough money that sort of makes you happy, then then take it and wait. But the short trade will be, you know, be here, or if we do move up here for a C wave, when that drops here again, you're going to see you know, a little ABC pattern at that point, and then down at that point. So that sharp drop. And the C wave, you want that to be a bit lazier as well than the A wave, you know. So you look for that as well. If it's faster than the A wave, then we've got a problem. We've got more of a bullish count in at that point, you know. But yeah, as far as the crow flies, we can look to short under this level here. Just watch the market makers and so on, the futures market at the get-go. But so I'll just put that under here. And anyway, when it's under here, it does need a fresh, you know. It's not all about that price point there. It's about the new price point, you know, because this one here could take the stops out there and then kick back, you know, or it could fall shorter and those type of things, you know. So just be a bit careful about that. Okay, so that's it. Thanks for tuning in. Cheers.